Will bankruptcy eliminate my IRS debt? Have you ever wondered if filing for bankruptcy can wipe out your tax debts with the Internal Revenue Service? It's a common question and one that deserves a clear answer. Let's break down how bankruptcy interacts with IRS debts, including the types of bankruptcy available and the implications of tax liens. First, there are two main types of bankruptcy you might consider: Chapter 7 bankruptcy and Chapter 13 bankruptcy. Chapter 7 is often called liquidation bankruptcy. It can discharge certain debts, including some tax debts, but there are specific conditions. To qualify for discharging tax debts under Chapter 7, the debt must be for income taxes. Additionally, the tax debt must be at least 3 years old. You also need to have filed your tax returns for that debt at least 2 years before filing for bankruptcy. The Internal Revenue Service must have assessed the tax debt at least 240 days before your bankruptcy filing. Lastly, you cannot have engaged in tax evasion or filed a fraudulent return. On the other hand, Chapter 13 bankruptcy is known as reorganization bankruptcy. This option allows you to create a repayment plan to pay off your debts over 3 to 5 years. While Chapter 13 does not eliminate tax debts outright, it can help you manage them. You can repay your tax debts through the repayment plan. If you complete the plan, any remaining tax debt that was included may be discharged, provided it is older than 3 years and you filed your returns on time. Now, let's talk about tax liens. If the Internal Revenue Service has placed a tax lien on your property, filing for bankruptcy does not automatically remove this lien. Even if your tax debt is discharged, the lien may remain until it is paid off or expires. This means that while bankruptcy can eliminate your personal liability for the debt, it may not remove the lien on your assets. Before you consider bankruptcy, you might think about an IRS installment agreement. This option allows you to pay off your tax debt over time. However, if you find it challenging to keep up with these payments, bankruptcy might offer a more manageable solution. Filing for bankruptcy can stop collection actions by the Internal Revenue Service, giving you some breathing room to address your debts. In summary, bankruptcy can eliminate certain IRS debts, but it depends on the type of bankruptcy you choose and the specific conditions of your tax debt. Consulting with a bankruptcy attorney can help you determine if bankruptcy is the right option for your situation.